Hi folks, Adam Renew for Renew Partners. Glad to see you again for another episode of Coffee Talk. This week we've got one of my mates and business partners, Mr. Phil Proctor from Proctor Accounting. Hello, Mr. Proctor, how are you?
Good afternoon, Adam. Good to be here.
Very good. So before we kick things off, we'd like to do the standard general disclaimer. So if either any of the clients from Renew Partners, Array Financial Services, Mainline, Cumulus or Proctor Accounting would like some specific advice, please speak to the relevant directors internally. So the reason we've got Filthy on today is we're going to talk about instant asset write-off, and it is a pretty interesting topic, even though accounting might not be one of the most interesting things out. We sort of think, Phil, but as we've discussed, this is massive. So we've got some pre-discussed questions. So if you can, please start us off with, what is it?
Instant asset write-off is exactly as the name suggests. The asset you buy, you can write off completely in that year's tax return. So previously we had what we would call effective life. Yep. So you'd estimate the effective life of an asset, and it would be depreciated over that asset's effective life. Then it became an instant asset write-off up to $150,000.
Yep.
However, on the 13th of October, that was changed to infinite. Wow. So, for example, somebody buys a $200,000 piece of plant and equipment, they will get an instant asset write-off for that. Now, this needs to be done by June 30 next year. So that's our magic. That's our magic date. But as we've seen in previous years, the government keeps on extending it. So we won't know until possibly the May budget next year whether this gets extended further.
Right. And as you and I have discussed before, it's not only purchasing or having the contract for it, is it? You've actually got to have it sort of sitting on the ground or working for you. Correct.
It has to be installed and operational by June 30 next year to claim the deduction.
Okay. So you've sort of you've answered that you've answered that just a minute ago, but how much is it? So basically it's unlimited, as you said.
Correct. It's unlimited. So it was 150,000. Now it's unlimited. Now, admittedly, for a lot of businesses, you won't be buying machinery much more than 150K.
Yep.
But and it's each, not that it matters, but it's each individual item as well. So, for example, you buy a bit of plant and machinery worth 80K, you buy another one worth 230K. Those ones are treated individually. In years gone by, one would be an instant asset write-off, the other one would have to be depreciated.
Okay.
So it's all about boosting the economy and getting small business up and running.
Absolutely. And again, as you and I have discussed before, which is why it's important to get tax advice when you do this. It's all well and good. It's all well and good to offset your income this year to make it look like you're not making any money, you're not paying any tax. But geez, that makes it hard next year if you're trying to borrow money too.
Spot on, absolutely. And cash flow. If you're buying a $200,000 asset, how is that going to affect your cash flow if you're getting that asset on finance? We've got obviously repayments back on that. Also, with that, with the interest, with the cash flow, well, once again, will the bank, based on your financials, give you finance for an asset of that value? And more importantly, does the business really need an asset like that, and would it be utilised in the business? Because last thing you need is buying a $200,000 dust collector.
Yeah, correct. Well, and that sort of leads me into this next slide where we've gone, so sort of how significant are the changes? So if we use that dust collector for argument, or, like let's say it's a box machine or whatever, in the new world, if let's say we spend 150 grand, or in the old world and you spent that old 150 grand, how does that line item work different to the punter?
Simple. If in the old world, if it was over its effective life of, let's say, 10 years, you'd only get a potential deduction of $30,000, which would save around about $10,000 potentially in tax.
Yep.
And obviously, I'm using some very, very rounded figures here.
Yep.
In the new world, it's closer to $50,000 you're saving in tax.
Wow. So it is substantial.
Absolutely. Now, what could also do is the depreciation would then potentially create a loss in the business, which would then be carried forward to future years to be offset against future years' profits.
Fantastic. Which again is great, unless you're trying to borrow money.
Correct.
Yep.
Now, the only thing in favour of that, I guess, sometimes is some banks they back out what we call the non-cash items such as depreciation.
Yep.
But they're also looking at, yes, you bought a $200,000 asset, but what's the liability against that asset sitting against it?
Absolutely.
So yes, so in other words, your net assets would be zero if you've got the full finance for that $200,000 item.
Yep, absolutely.
Yep.
Well, and I know we've discussed this before, and this is an interesting topic. Does it apply to cars? How does it apply to cars? And are we going to see a lot of tradies driving around in Maseratis?
I'll answer the last question first. No, because it applies to the car limit, which is $59,136. So you buy yourself a $250,000 Maserati. That is fantastic. $200,000 of it will be non-deductible, and the other 59, so long as it relates to work, will be deductible.
Yep.
Now, once again, good luck with the Maserati and your logbook, making that work related.
But on a serious note, even though we joke about that, like it doesn't take a lot to get a car over 60 grand today. So
no, but it also depends. For example, if you buy a ute that carries more than 1 ton, and it's a business, and it's more than the $59,000, that's not classified as a luxury car. We're talking about more things like sedans, SUVs, station wagons, etc.
Yep.
So just remember the business use of the car and the fact of whether it falls under the luxury car. The 1 ton limit is a good one.
Yep.
So in other words, it's a workhorse. If you, for example, classic Mercedes vans might be worth, Mercedes Vitos might be worth $90,000. Well, you will get an instant asset write-off for that $90,000 because the luxury car tax or luxury car limits don't apply to something like that.
Okay, cool. Excellent. Well, that leads us into give yourself a plug. Well, I know what you do. And a lot of our clients know what you do. What services does Proctor Accounting provide?
We service a lot of the what we call construction industry, uniform services, but also we do a lot of businesses, small to medium businesses, generally in the vicinity of 200K up to $5 million turnover. I'm actually off to our clients in the next half hour to go through his monthly accounts, projections, all that sort of stuff. So we sit down with clients, go through it all, look at cash flow, look at tax planning, where's the business heading, should we potentially be getting an apprentice, and we'll put more staff on, we'll look at payroll tax, all the things that generally that can impact on the business, but the business owner needs to be aware of, and we then can point them in the right direction. Or, for example, lots of business owners feel like they want to do their books themselves, but is it more beneficial for them to engage with a bookkeeper? That sort of stuff.
And you do a lot of PAYGs and the interim taxation variations, 221Ds, all those sorts of things.
Absolutely. Yep, most certainly.
And not that we're going to give any other businesses a plug, but there's also a self-managed super fund audit administration portal called Proctor and Renew. So we don't know where that's come from.
Agreed, and it's a very good business. Very good company to represent.
Very good. Well, mate, thank you very much for your time. I know that, and you really have oversimplified it because it is substantially more structured and detailed than what you've gone through. So if anybody would like any more information, please feel free to call Phil, and Phil would be more than happy to have a chat. If you need those details, Alex from Array, Steve from Mainline, or myself from Renew Partners would be more than happy to help you. Phil, thanks for your time today. Much appreciated, and have a good Friday.
Thanks, Adam, and I'll see you soon.
See you, mate.
Bye.